Good evening, folks. This is Naim Aslam. Just please give me a sound check and a screen check if all of you can hear me and see my screen. Okay, so pretty much everyone is saying that they can see my screen and they can hear me as well. Fantastic, folks. I hope you guys are well and you guys are safe and keeping it clean. That is the most important thing. I'm based in London. Where are some of you guys based? So we got a lot of people in this room today. So let's say, Stefano, where are you based? London. Excellent, mate. Excellent. Okay. Croydon. Okay. Okay. A lot of people are still okay. I see a lot of people from London. Well, things are gonna get unfortunately a little bit worse before they get better. But as long as we keep it clean and maintain those distance and sure the things will get better. So before I continue, it is important for me to ask one imperative question, which is how many of you have attended my previous webinars? Please say yes or no. Okay, a lot of yes are coming in. All right, okay, fantastic. All right. Okay, so the reason that I wanted to share that with you, I wanted to ask you this particular question is because the structure of these particular master classes are always going to be the same, because at the end of each webinar, I will be sharing a strategy, right? And we will talk about the back testing of the results of those particular strategy and then how it performed. So it is very important for you guys to pay attention throughout the webinar. That's why our webinars are not that long. We keep it very small and concise. So let's begin with our first slide. As always, the most important thing is the disclaimer and risk warnings. So anything which we'll be discussing in this particular video cannot, or in this particular webinar, cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. And then you'll be in a much better position to make an informed decision. But yes, of course, we are here to help you and guide you. So please continue to subscribe to our social channels and to our Twitter accounts, and also, of course, our daily videos as well. So how can you contact me? As always, the first and the foremost important thing for you guys to note right now is the Twitter handles for myself and for AvaTrade. Why? The reason is that on a daily basis, I put enormous amount of good trading ideas and various different thoughts about the markets. For instance, that if this is a buy opportunity, if this is a sell opportunity, if the market has bottomed out, and all of that stuff. So we talk about all of that on Twitter accounts. So please make sure that you are following us on our social media, especially as my Twitter handle is just over there. So you guys can feel free to follow me on Twitter, ask me questions, because I am very, very active, which I will show you in a bit. With respect to our YouTube, the AvaTrade channel is obviously under the name of AvaTrade. I will share those details as well. On a daily basis, folks, what we do is we do two different videos. Firstly is a fundamental video, and this is a slightly bigger video because it is between 5 to 7 minutes. So the idea behind the fundamental video is that we talk about all the major factors which are going to move the markets on that particular day. And we also give you share some of the nuggets in relation to what you can be expecting with respect to that particular week, or in the coming weeks, or in the coming months. So it's a very good video with overall view of the markets, where we discuss about equities, forex, and everything else with that. Now the technical analysis video, on the other hand, is more focused about the technical analysis. So why don't I bring those channels out, and then let me share that with you. So this is the channel, right, which is right in front of you guys, right? So you can see that on a daily basis we are uploading a lot of content on this one. This particular session you can ask, you know, Q&A. I'm holding one session tomorrow at 10:15 a.m. London time, so please you know, join us on our YouTube channel. Watch that, ask me any questions, and I'll be there to answer all of them. And then on top of that, folks, we also have coronavirus updates as well. So basically the impact of coronavirus on the financial market. So you can see all these videos in a very short 2-minute video or so. I share what is the impact on the equity market, what to expect, how to trade. Similarly with the commodity markets, and also some other interesting derivative for that particular day. Usually it has been RIX. The volatility index has been through the roof. Now with respect to Twitter handle, very quickly, as I said, the handle is right here. It's very active. We post all the important information. So for instance, today, you know, if you compare the 3 major indices, the US indices I'm really referring to, NASDAQ, Dow, and S&P, the important thing is that the NASDAQ index has been the index which has been very resilient to the recent sell-off. I mean, this particular index, we didn't see that much of a percentage loss from its all-time high. But when we start looking at the other indices such as Dow Jones and S&P, they've been heavily hit. Now, if you look at the market reaction, particularly today, what do you see in that market action is that the Dow Jones is massively up. In fact, it is on track to record 18% gain in the past 2 days, including today. So yesterday there was an 11% gain. Now the market is up. Dow Jones is up by another 6%, meaning 17%. When you look at NASDAQ index, it is only up by 1% or 2 today. So that, you know, that sort of information is very, very important for you guys to digest and really to understand that what it really means. So and then, you know, there's a lot of information throughout the day. I tweet quite a lot of different charts and stuff, so you can see all of that over there. Right. So let's go back to our presentation slides, and let's begin with the agenda. So first of all, what we're going to discuss in this particular webinar is going to be in 5 different parts. Firstly, the importance of the Bank of England meeting, why it is so important. So we will discuss that. What instruments to trade on the back of that, as always. Thirdly, the current state of markets and analysis. So we will look at various different derivatives, and we will see the percentage gains and losses, and then define some entry and exit point with respect to that. So that really encompasses the next point, which is defining the levels. So levels would be support and resistance zone. So your potential entry and exit levels with respect to that. And finally, defining a strategy, right? So this is the most important one, where we will really discuss that what to expect in that particular strategy. Now, how do you find, first of all, the information with respect to MPC, with respect to Bank of England meeting? All what you got to do is you got to go to forexfactory.com or on AvaTrade or any of the calendars, and then you can see the data. So tomorrow at 12 p.m. London time, we will have the MPC official bank rate, right? The monetary policy decision will be coming. Official bank rate will be announced. Now, if we click on this particular folder and then click on charts, we can see that it hasn't been that long when this interest rate was sitting right over here, right? Well above the 0.7%. At the time, the Bank of England came and it reduced the interest rate by 50 basis points in this particular week in March, not too long ago, like I said, you know, less than 2 weeks or so. And then last week, the Bank of England again reduced the interest rate by 15 basis points, and now the interest rate is really sitting at 0.1%. Now, obviously, the impact of the cutting the interest rate on sterling has been somewhat positive initially, right? Why that was initial, the initial response was positive. Theoretically speaking, the response should be negative. Currencies should be moving lower whenever the Bank of England or any central bank cuts rates. But in this particular circumstance, it was completely opposite. And the reason was because traders want central banks to come and intervene into this market by introducing the loose monetary policy. Otherwise, the disaster because of coronavirus is going to be massive. So we will discuss all of that in the next part, where where we'll be defining the state of the market and everything. But for now, the most important thing is that the current interest rate sits at 0.1%. The Fed is the Bank of England is very much following the footpath of the Federal Reserve, meaning how they are cutting the interest rate. So the Federal Reserve interest rate is currently sitting at 0%. So when we look at the interest rate for the Bank of England, it is sitting at 0.1%. So let's see if they cut the interest rate again tomorrow. Now, with respect to markets, what I'm going to do is I'm going to bring out our chart for a sterling dollar, right? So you can see the chart which is right in front of you right now. This is a sterling dollar chart. The price action in terms of a price action, the candles are the price action is in candlesticks, right? So you could see that on a daily time frame that we have been consistently in a downward trend. The price has been moving all from from the top of this particular chart and then going all the way from here. But it is this particular move fairly recently, during the month of March, that we see this massive moves to the downside. And a lot of that massive move is mainly not because the Bank of England cutting the interest rate. It was mainly because the dollar, because we are really looking at sterling against the dollar, it has been very strong, right? Because the dollar index has really acted as a safe haven currency. Now, you would say that, okay, if that has been the case, then why are we seeing these particular moves to the upside now for the currency, for sterling dollar? The reason has been that from the last 2-3 days, since the Federal Reserve announced further, or let's say the unlimited quantitative easing, that has created enormous pressure on the dollar index. Because of that, we have seen this massive surge. Now, the next question is that, are we going to continue to move to the upside from here, or are we going to move to the downside? What is the reaction we are likely to see tomorrow? Well, it is going to be a pretty mammoth. It's going to be a very big price action with respect to that. So what we got to do is we got to define our support and resistance levels. So with respect to that, I am really looking at the low of this particular candle, and I'm encompassing some of this particular candle, and then I'm defining my support zone, as you can see. Now, if we see the Bank of England coming up with some sort of hawkish message, then the price can jump on top of this particular candle. Let's just make that a little bit more clear right over here. And then with respect to the other, and we can always change the color of these lines to red, because green is your support, red is your resistance. So in order for you to understand that, all what you got to do is double click on it and then go to horizontal line properties, click on style, change the color to red, and boom, there we go. Now we can clearly see on the chart that what you see is that this is your support zone, this is your resistance zone. Now these are the levels that we are really going to be focused on as of tomorrow, because soon the Bank of England comes up with its interest rate policy, with its decision. These are the levels that I would be really looking at. If the price comes into this, then I am likely to short. Why I'm likely to short? Because we haven't seen the massive influence of coronavirus. I think the worst is still about to come, and that is going to create pressure on sterling. So if we see an upward move with respect to sterling, the opportunity is really to short the market to the downside. But remember that these resistance zones are fairly large. The reason is because we are living in unprecedented time, and the Bank of England or any other central bank from the developed country is really on their toes. So we could expect anything coming from the Bank of England. We could expect, and with respect to their quantitative easing, we could expect something similar from the Bank of England as well, providing further support, a lending hand to corporates. If anything like that happened, that is a very, very dovish message. So we could see sterling falling all the way to here. But if not, then we could see a massive rally to the upside. Remember, right now the dollar is a weak currency as compared to sterling as it stands as of now, right? Or if we compare the situation from the last few days. So that is our concern right over here. It is very important that we understand that. Now, with respect to FTSE, what an opportunity we had, because look where the price fell to. Now, this is obviously a weekly chart, and then for the FTSE 100, look where the price came to. I'm just going to define our support zone once again, and there you go. So this is our support zone with respect to FTSE. Now, remember, FTSE used to trade all the way over 7,800. Now we are near enough, over 40% sell-off that we've experienced for the FTSE. The market came in this particular support zone. Let's change the color once again to green to keep things in line with everything. So again, right click, go into it and change the color to green. And same with this one, double click, right click, horizontal line properties, and then we look for a green color. There we go. So this is our support zone with respect to the FTSE. Now, obviously, price did come into this, but it didn't stay there for that long. The massive move to the upside was very, very strong with respect to the FTSE, because you can see how the price was really bouncing back. And then this is a massive, massive bounce with respect to the FTSE. Now, the question which many investors are really asking themselves is that is this the end? Is this the bottom in place? Can we really place a stop loss under this particular candle? And can we shoot for the moon, which means that can we shoot for the previous high? Wow. If we put a Fibonacci retracement from here to here, we are almost 50% with respect to the FTSE. Now, when the price, let's actually do that. Oops. Fibonacci, come on, Fibonacci. Oops. There we go. Okay. Sorry, not 50%. So we are less than 38%. My apologies. I was measuring the remove a little bit wrong. So we are above the 23% retracement. So we have recovered 23% of the losses, but we're still below the critical level of 38%. Why that is critical level, the 38%? The reason that level of 38% is very, very critical with respect to the markets is because if the market cannot cross above the 38%, it pretty much confirms this argument that there is not enough momentum. There is not enough momentum for this to continue all the way to the upside. And if that remains the case, then okay, the path of least resistance is skewed to the downside. And in my opinion, because of the overall situation, yes, we have cohesive reaction from the federal from the central banks. Yes, we have cohesive reaction from the fiscal monetary policies. Yes, there is the likely chances are that the China is returning back to its to work. So all these positive signs are already there. But I think the UK and the US and Europe still it's likely that the bad days are still ahead of us. So that is the last element or a factor that we are really waiting for. Once we start to see curtailing of that coronavirus, then would be really the point, then would be really the instance when we are going to say that, yes, you know what, now is really the time for the markets to understand this particular concept that the bottom is in place. Right now, I would love to see more retracement when it comes to any of the major indices, whether it's a FTSE, whether it's a DAX, whether it's a Dow Jones, whether it's Nasdaq. I would love to see the retracement, and I would really like that retracement to continue to the downside, and I would like to see another 20% drop on them, and it is likely that we will see that. But let's see how that would go as we continue to move. Right. Now, so far so good, folks. Are you guys with me so far? I just wanted to make sure that everyone understands it. Good. Thank you. So, Stefano, you're asking me a question that what time do you post a video on YouTube? You mean the video, our daily video in the morning? So the daily videos are up before 10 a.m. London time. Before 10 a.m. London time, the fundamental and all those videos are pretty much up there. So please continue to watch that. And then also, will you want it to break current support? So you want it to break current support? Jared is asking. I would love for this equity market to continue to move lower. You know why? Because I really want to see this market, especially the US market, retracing up to 50 or 54%. I really wanted to see that much of a big sell-off before I go all in. Right now, to answer your question, Jared, is that if you have 100, if you have 100,000, then whatever the size of your portfolio is, right now, given the recent sell-off that we have seen when the equity market was down over 30%, in on my Twitter and on our YouTube channels, we talked about this extensively, that this is the time that when this extensive sell-off was up to 30%, that you can deploy 20% of your total capital. 20% of your total capital at that time. But you should not be putting all your 100% capital. Why? Because in order for us to deploy the 100% capital, we really wanted to see a bigger discount in the market. And that bigger discount needs to be, at the same level that we've seen during the financial crisis, meaning the indices needs to drop more than 50%. If we see that, then we are confident. But now, let's say if the bottom is in place, let's say the market never looks back, right, and it continues to move higher. What I am going to do then, that I'm going to say that, okay, I'm already 20% in for the disclaimer purposes, right? I'm already 20% into the market. What I'm going to do is now I'm going to wait for the market on a daily time frame to come near its 200-day moving average. The moment it crosses above the 200-day moving average, I will deploy another 10 or 15% of the capital. Why? Because at that time, I will have a clear confirmation that the price is back above the 200-day moving average. And as long as it stays above the 200-day moving average, I am very confident and I'm happy to deploy extra capital. But otherwise, right now, I do not feel comfortable in deploying extra capital. Does that make sense, Jared? Yeah? Okay. Okay, great. If guys, please keep shooting the questions, because I really love to have more questions from you guys, because that's what makes it everything nice. That's what we are here for. We are here to answer your questions, and if you guys should take the maximum opportunity to learn of everything from this particular session. All right, folks, back to Bloomberg Terminal, the terminal that we love the most. Time for our strategy, right? The strategy that we talked about. So are you guys ready? Is everyone ready? I'm about to discuss a strategy which has pretty very decent gains. And then if you guys are ready, then we will continue, because we are coming towards the end of our webinar very soon. Okay, folks. So what we have a very simple strategy. We have a moving average right in front of you guys, right? And as always, I'm not going to discuss the number of this particular moving average, but the strategy itself is very simple. You buy when the price goes above this particular moving average, and then you sell when the price comes below this particular moving average. We've done a back test all the way going 1 year. The time frame that we are looking at is 60 minutes. The index that I'm looking at is a UK FTSE 100 index. So this is going to be highly useful for you guys going into the FOMC meeting tomorrow. Why? Because this particular strategy has given you a percentage gain of 37%. 37%, folks. That is a whopping return on a period of 1 year by trading FTSE 100 on a 60-minute time frame by using a very simple strategy. Now, if you guys wanted to know the number of this particular strategy, obviously all what you have to do is, you go back to Twitter account, which is right over here. Tweet me back, follow me, and tweet me back, and then I will share the strategy with you. But you can see that on the long side, we had 118 total trades, 86 losing, 32 winning. Similarly, on the short side, 83 winning trades, 34 winning trades, right? And total, we had 169 losing trades, but 66 winning trades. So how did we make this 37% gain? As always, my focus is on these two particular numbers, average win and average loss. Look at my average win. My average win was $1,032 on my long trades. My average loss on my long trade was $415. Now, similarly, when I go on the short side, obviously this is where I've seen a massive returns, because you can see that the short trades are more profitable because 30% return is coming from the short side and 6.65% is coming from the long side. On the average win on the long side is $1,780 per trade on average, and on average loss is $359. Putting both of these two figures together, I am making $1,500 per trade on average, and on average, I'm losing only 388 trades. Now look at the drawdown ratio for the same one. Maximum drawdown the maximum drawdown percentage in this one is 13%, right? Which is not that at all, yeah, which is not that much at all. Once again, percentage maximum drawdown is only 13%, which is, again, I am emphasizing, is not that much at all. Where can I get this Bloomberg software? Someone is asking me this question. You have to pay £20,000 that's the subscription fee for 1 year, and then you can buy Bloomberg terminal from Bloomberg itself, right? So that's just it. But otherwise, continue to attend our webinars where I share all these strategies with you guys for completely free of cost, just because we wanted to give you guys that incentive that you are attending our webinars and then you get this strategy. Very, very simple strategy. It is a simple moving average. I will share the number with you after the webinar to those people who will ask me about this, and then follow me, obviously, and then so we will share the number. What you can see is very simple. Soon the market goes above the moving average, you buy it. The moment that it drops below that moving average, you sell it. Very simple. All the green lines, all the green arrows, you can see they are buy. All the red arrows, you can see sell. You can program this one fairly easily in your MT4 platform. Nothing difficult that at all. So obviously you can see during the period upward period, there were lot of trades, but the trend was there, so it's still very much profitable. Over here the trend was to the downside, and smoothing moving averages are really, really good. And then coming into January, again we had an uptrend, then we had some downtrend again, which was pretty good, and then we had a really, really good winning trades from here onwards, right? By the way, The more important thing than anything else with respect to any strategy is that we need to keep our average win to average losing trade higher. Your percentage of winning and the percentage of losing trades, that ratio doesn't really matter, because you can see overall I had 71% of my losing trades and 28% of my winning trades. But the maximum drawdown throughout this one period, once again, isn't more than 13%. So that is the beauty of this one. Are you guys all clear about this? Okay, so people are asking about the Twitter handle again. Here is the Twitter handle, folks. Keep a note on that. Follow, and then we will send you all the strategies. Okay? All right, folks, stay safe, play safe, and it's been an absolute pleasure to be with you guys as always. I really appreciate you guys taking the time out and then joining us for the webinar in this pandemic time. But as always, we appreciate all the help and we appreciate all the comments. And join us tomorrow for our live Q&A on YouTube. I've shown you the YouTube channel before, which is AvaTrade. And we'll see you guys.